Hello guys and welcome to Capital Mastery. My name is Reda and today we're gonna speak about 5 ways that you can invest your money. I have ranked them from the easiest to the hardest, so hit the like button and let's get into it. The first thing that you have to understand is that investment always comes with risk. So never invest money that you need or that you will need in the next 6 months or 1 year, because you may lose money in this way. And in general, investment comes with risk. And not only investments, also when you put your money in a bank without investing it, there is always a little chance of risk. Like, don't forget 2 years ago or 3 years ago what happened in Greece. Do you remember, guys, when the recession came in Greece? People had money in their bank accounts, but they wasn't able to withdraw their money. They limited, I think it was like 40 euros a day. They couldn't take out more than 40 euros a day. So always there is a little bit of risk, and I think it's a very good idea to always keep a little bit of cash at home for these kinds of situation. So number 1, saving accounts. All of you guys should have a saving account, and all of you should make research on internet about saving accounts and highest interest rates about saving accounts. I was surprised that my personal bank, where I go, basically my bank that I'm using for more than 3 years now, every time that I go there, they try either to sell me a new credit card, or they try to tell me, oh, take this personal finance, you can have up to 20,000, maybe you want to buy a new car, maybe you want to do I don't know what, maybe you want to change furniture, but they never speak about their saving account. Or if they do, they just tell you, well, you have ISA that you can save 0.45% or not even 0.4%, which is almost equal to 0. But when I've made some research on internet, I found that the same bank that I'm using has a program with 5% return annually. Yes, 5% on £3,000. So if I invest up to £3,000 over 12 months, they will give me 5%, and they never told me that. So make sure you make your research. I've made some research and I found at least 5 banks, which are HSBC, Halifax, Barclays, and other banks that I can't remember now. All of them, yeah, Santander is one of them, but all of them, they offer good saving programs. And usually it starts from like 2-3% up to 5%, depends on how much you want to invest and for how long. Number 2, saving apps. A friend of mine that will probably recognize himself in this video showed me last year about an investing app called Moneybox, and I'm sure that in each country you will find an investing app, or at least most of the countries. I know in the US there is one called Capital. Other countries I don't know, but make your research. I'm sure that you can find one. So this Moneybox, you just need to download it on your phone. It works with iOS and Android, and what it does is that it helps you save money and invest it by rounding up your spending. So let's say I go buy coffee with 1.70, yeah? This app will round it up to £2 and take 30p away, save it for you, and then invest it for you. And you can choose the level of risk that you want to invest your money. You can be either conservative or adventurous or moderate. Of course, if you're adventurous, the returns will be higher, but the risk to lose is also higher. So it's up to you to choose which level you want. And I really recommend this app because, first of all, it helps you save really easily. I saved a bunch of money this year just by using this app. And secondly, it helps teach you about investing a little bit. You can see that you can have returns on this money. I really had up to now, I think 4 or 5% return, so it's not bad at all with just my spare change. Number 3, mutual funds. To explain the easiest way, mutual funds is basically a fund that owns many stocks, hundreds of stocks in many different sectors of the market. So to explain that is that basically they will own a bunch of stocks in tech companies, they will own a bunch of stocks in car companies, in gas companies, in movie maker companies, etc. So that you, when you come and you give them money to invest, they will spread it over all these companies, and usually the risks are pretty low because you will perform as good as the market will perform. If the market will go up, your money you will make interest and you will earn money. If the stock if the stock market underperforms, you will underperform as well. But now if we see some statistics, since the stock market exists since the 1920s, the stock market always has been rising with the average of about 7 to 8%. And if we check the statistics only since 2007, considering that the recession started in end of 2007 and it was like almost a stock market crash there, like companies were down 40%. Since then, so since 2007 until today, the stock market has going up each year over year with around 8 to 9% on an average. So that's why mutual funds, I think, they're good, because you don't need any knowledge in the stock market. You just hand them your money, how much you want, and then they will invest it for you and then give you the returns. Number 4, investing in private companies. By private company, I mean companies that are not traded on the stock market. So to invest in a private company, I will give let's say an example that I had few years ago, an investment opportunity. Unfortunately, I didn't have that much money at that time to make that investment. So it was with Gatwick Airport. Everybody knows Gatwick Airport. It's one of the biggest airports in the UK, basically. So the investment was like this. I had to buy a parking place in Gatwick Airport for £25,000. And then they would pay me rent for that parking place. They would pay me £2,000 in the first year, £2,000 in the second year, £3,000 in the third year, £3,000 in the fourth year, and £3,000 in the fifth year. So in total I would have made 3, so 9,000 plus another 4,000, 2,000 and 2,000. So it's £13,000 in total. And then after 5 years, they would buy back from me the parking place. So that's how the contract was with Gatwick Airport, which I think is a pretty safe airport. I don't think it will go anywhere in 5 years. Of course, there are risks. But that's why I've ranked it at number 4, because investing in private companies, it's always risky. The company can go bankrupt, the owners can just disappear. So that's why here the level of risk is a little bit higher. But if you are able to take it, if you have that mindset that you are okay with losing money over time, and of course considering that you will win on the long run, then I think it's okay to do it. So you will end up, for this Gatwick Airport example, for example, you will end up having back after 5 years or 25,000, plus you have made another 13,000. So basically earning another half of the money over 5 years. And I know there are many other companies with less money that you can do that. I had an opportunity, for example, to invest £5,000 in a construction company in London, one of the biggest constructions companies, and they told me, okay, you give us £5,000, we will give you back after 1 year 8% return on it and give you back your money as well, and if you want to reinvest you can redo it as well. But what I would advise you with these private companies is to make a lot of research. You need to do a lot of research on them, see for how long they have been existing in the market, check the books, how much money they have. You can find those informations. They are not totally public, but you can still have clues, at least see what plans they have for the future. So it's not an easy game here. We need to do a lot of research, and also the risk is always a little bit higher, because you can basically, the private company can just disappear if you invest in the wrong company. And finally, number 5, you can be a stock picker. What does that mean? It means that you can pick your own stocks and buy shares in the companies that you want, the public companies that you want. This one already is high risk, because especially if you don't know what you're doing, and most people don't know what they're doing, because before buying a company you need to make a lot of research. Let's say you want to buy Apple shares. Yeah, you want to buy a bunch of stocks in Apple. So most people will think, well, you know, Apple is a good company, they've been here for long, they're great, they still create a very good product, so I will just buy. The chances that it will go wrong are big or small. It's really like gambling in this situation, let's say, because before investing even in Apple, you need to make a lot of research in Apple. You need to see how the stock went up in the last years, how much money they have, how is their balance sheet, how much they've been growing as a company in the last years. Will they be growing in the same rates in the next years? What plans do they have? Do they have any debt? And these are all public information that you can find usually on the investor site in Apple, for example, or any other company. If you go investor Apple or investor Google, you will find this information for free. Basically, it's for the investors to decide if they want to invest or not. So make sure you make a lot of research, and you need to have knowledge about it. Don't start picking stocks unless you've made at least 3 months research about the stock market itself. Then before choosing your company, you need to make at least 1 month research and reading everything you can find about that company. And it requires a lot of work. It's not easy. So unless you're really passionate about it, I don't recommend you to do it. It's a way that if you do it right, you can make 20-30% return a year. Yes, 20-30%, it's a lot. But if you do it wrong, you can lose money. Now, many people say, well, it's like gambling. You just put some money and wish for the best. It's not like that. Investing, I'm not speaking about stock trading. Stock trading is for the short term. Stock trading is me saying, okay, tomorrow I think Apple will go down or will go up, so I put some money and I bet on it. It's not like that. Investing is saying that I see that Apple have great products. In the next year, I know that their program is to do this and this and this. And based on that, considering the numbers that they had before everything, I think that in the 5 years, they will still go up. Because, for example, Apple customers are one of the best customers in the world. Like, I never saw somebody having an Apple and buying a Samsung, for example. Most people, when they have an Apple, they just wait, or an iPhone, they just wait for the new iPhone to come out, and then the new iPhone, and etc. They will never buy something else, or that situation is very rare. So here about stock market investing, you need really to make like a fundamental analysis to see exactly how you can predict that stock on the long term. And it's not, how to say, it's not safe, risk-free, but if you do it right, you can definitely make money on it. That was it for today, guys. I hope you enjoyed this video. Let me know in the comment section if you would like me to speak more in depth about one of these 5 ways that have been to invest your money. If you would like me to speak more about the stock market, let me know. If you want me to speak more about mutual fund, let me know and I will do it for you. Or if you want me to speak about all of them, I would make a separate video about all of them and speak more in depth about everything. So thank you guys for watching, subscribe, and have a great day.